Welcome to the African Bank half-year results announcement. We're delighted that you could once again make time to join us to give you an update on where we are in our Excelerate strategy. The structure of our presentation today will be that I'll start off with the group overview, indicating where we are in terms of our Excelerate strategy. I will invite colleagues to cover key aspects of divisional updates in personal banking, business and commercial. And then, of course, our main feature being the CFO taking us through financial analysis for the half-year performance. I will then round off by indicating the journey ahead and what to look forward to towards financial year end. Our reporting theme today is marked by the fact that 50 years ago, African Bank opened its doors for the first time in Karankua. It is 50 years of African resilience. It is 50 years of a journey of purpose and progress, honoring our founding vision, honoring that deep sense of purpose around being a bank that empowers people, a bank that's got inclusivity at its very core. It is a bank that continues today to be the bank for the people, by the people, through digital innovation for the services that we offer. We celebrate this milestone and we are inspired by what it means in the sense that what we do now should really build 50 more years of this legacy in motion. Our founding vision has inspired the purpose that we are about today, that of advancing lives. It has inspired our mission to build a customer-centric, data and digitally enabled bank that is diversified in its offering, that is sustainable in its performance, and that has got a compelling proposition for shareholders going forward. It is a strategy that we've rolled out in 2021, co-created by colleagues in the bank and our various stakeholders. It is a strategy that we entrenched in 2022 and enabled us to grow inorganically as well, with the coming in of Ubank, of Greenrod Bank in 2023, the work around ensuring that we've got a target operating model and a structure that supports us moving from just being a monoline retail unsecured lender into a diversified personal banking, business and commercial banking. In 2024, we saw further milestones in bringing capabilities into our offering in the business and commercial space. And we are aligned with the theme of FY25 of consolidation. We are now in a position to bed down these acquisitions and new capabilities and build a diverse business that extracts value for our customer franchise. A customer franchise that continues to grow in bounds, a customer franchise that continues to experience as a fully-fledged personal, business and commercial bank. We'll be talking today about a performance that is really starting to extract value from these new capabilities. In personal banking, we'll be talking about the growth of our purpose lending and secured lending franchise. In business and commercial, we'll be talking about the maturation of our business transactional services and more capabilities that have come in from the Sasfin Bank acquisitions of the commercial property book, of the business asset-based finance, and all of these things that enable us to serve our customers that much better. We'll be talking about what we're doing in insurance and the work that we are making progress on to ensure that the maturation of our end-to-end risk and compliance culture is really embedded in the organization. We'll also be touching on updates with respect to work towards the pre-IPO and ensuring that this bank is really fit for listing at the right time, market conditions allowing post-2027. However, this strategy execution doesn't take place in a vacuum. We work within an operating environment that continues to be challenging. Whilst inflation and interest rates are coming down, there's still a lot of pressure in terms of household disposable income and the financial commitments that were entered into at a time of high inflation and high interest rates post-COVID and post-2022. The advances in geopolitics, particularly from the US, have brought in new risks into not just world GDP performance this year, but also domestically in South Africa in terms of our own economic performance. The slow but promising structural changes that are taking place in the economy really bring about some hope. However, the business environment as a whole continues to be challenging. As a bank, we continue to leverage digital innovation to counteract these challenging operating environments and accelerating inclusive, tech-driven solutions that expand access, drive sustainability, and redefine trust in modern financial services. So in short, our Excelerate strategy to date enables us to continue on the theme of growth and diversification of our balance sheet. The total group advances, net advances grow by 20% at this half-year report, driven largely by growth in business and commercial that has come through organic and inorganic growth at 49%, really the key driver of that total group net 20%. Conservative lending in personal banking, where we are reworking our strategies with respect to unsecured lending, has seen us grow by a mega 3%. We expect this number to be slightly up in the latter part of the year. However, this remains true and on track with our stated strategy of diversifying our balance sheet, de-risking it from relying too heavily on unsecured retail lending to be a diversified, secured lending book that is in business and commercial as well as retail banking. This diversification has given us benefits with respect to lowering of impairments, given the lower expected credit losses that come with secured lending and the selective lending in personal loans. And this lower impairment, of course, goes right through the income statement and starts to really vindicate the correctness of our diversification strategy. We've seen, once again, the rise in non-interest revenue driven by transactional income, other income, and secured lending in this half of the year. This performance takes place within well-managed key resources of liquidity and capital. We're reporting at half year 28% capital adequacy ratio, a number that, whilst remaining well capitalized, could easily be 29.6% subject to a single capitalization instrument that is a subject of discussion between ourselves and the Prudential Authority. At 8% increase in funding, we continue to report a funding mix that has moved quite significantly from over-reliance in wholesale funds into customer-driven funding in both our personal, business and commercial space. All of this results in a healthy 14% increase in our total operating profits after impairment, registering our total operating profits at 2.6 billion rands, very much in line with our ambitions for a year-end that continues to grow above 5 billion come end of September. Whilst costs have increased slightly higher at 16%, this reflects the continued investment in new capabilities and in our people and systems that I've referred to, bolstering what we do in business and commercial, and of course, in terms of our digital transformation journey. We will double click on that when Anban comes up later on. We're delighted to report at half year a healthy 15% uplift in our net profit after tax to just over 202 million. This performance has taken place with a background of key milestones, particularly in terms of the increase on the customers that we serve on the African Bank platform to just over 6.1 million. A critical milestone, moving from just less than 1.1 million when we launched this strategy. Passing the 6 million active customer figure is really a testament of South Africans voting in confidence for what African Bank has morphed to become. It is these customers that are experiencing our enhanced insurance offering, our enhanced value add that comes from partnerships with leading players in fintech and value-added space, such as Lesaka, Shoprite, Checkers, and MTN through their Money mobile offering. All of this is really being backed by this enhanced product suite that we are bringing in and new capabilities that we brought in August and in November of 2024 through the acquisition of Sasfin's commercial property finance and Sasfin's capital equipment finance capability, systems and people that add to the solutions that we can conjure up for customers. I am delighted to also indicate that what we announced last year as enhancing capability in personal banking by going into home loans has really taken a step up with the announced acquisition of the Eskom home loan book that was at some point at about 9 billion rands of home loan assets, but we acquired at a sweet discount for 5.7 billion in this reporting period. We'll be embedding this capability over the next few months and into FY26. We've also made progress in the half year with respect to the pre-IPO work, completing the 10% allocation to the Kamva Lethu scheme, which is the share scheme for employees, and completed the work required to ensure that every African banker is not just an employee, but is also a shareholder. Everyone here, from the gentleman at the security gate to the group CEO, are also got a stake in the fortunes of this company. We continue to report on performance, not just in terms of net profit after tax, but also in terms of sustainability levers that enable this group to achieve long-term sustainability in what we do. And so in the booklet, we speak in detail about the progress we're keeping with respect to customer satisfaction, our net promoter scores improving in this first half, on social responsibility in terms of our CSR performance. We're talking today largely about financial resilience, but we also report in terms of the paradigm of inclusivity and how we do what we do whilst ensuring that we leave healthy footprint on the planet and reduce adverse impact in terms of climate change. All of these 5 levers are key sustainability paradigms and windows that we use to ensure that our performance is not only sustainable, but in fact enables this bank to have longevity in what we do for all our stakeholders, from our people, the communities we serve, shareholders, regulators, and the planet that we need to live better for next generations. I will now dive into divisional updates and start off by speaking to this alliance banking area of the bank, which holds a key place in our Excelerate strategy at African Bank. It is a strategy premised on our ability to enable financial services products on behalf of our partners and to complement their strategies with funding and transactional and other bank-specific services that they do not have. This is paired with our desire in turn to enable our value propositions and offerings to be carried through in terms of our partners' customers and fintech and other services that they are better at than us. We do this with Lesaka, wherein in the last half of the year, we continue to sponsor the EasyPay transactional products We continued to sponsor the Lesaka ATMs network and successfully partner with Lesaka and ShopRite to enable an ecosystem that supports our social grants, SRD program and distribution network. ShopRite, a major retailer in this country, is a reliable partner in us ensuring that we support their money market transactional products. As I've indicated, they are also a partner in our SASSA SRD ecosystem, and win-win mutual relationship continues to grow between us and that massive retailer with its massive distribution throughout this market. Our sponsorship of the MTN mobile money product in South Africa continues to develop with new capabilities being offered and ensuring value add for our customers, working side by side with this champion in telecoms. We continue to grow new partnerships and expand our network with new players entering our ecosystem such as Paycorp and RCS, and we'll speak a lot more about progress here at year end. I did indicate at the last report period that we are enhancing our insurance product. This enhanced insurance product is steadily becoming a cornerstone of our comprehensive value and support we provide for customers. And whilst we have a strong credit life as a key offering in insurance, providing customers with important insurance on their lending activities, we continue our journey to expand our insurance offerings to align more closely with the needs and lifestyles of our customers. With new products such as wills, trusts, fiduciary solutions, funeral for the diaspora, and providing cover for repatriation benefits for foreign nationals, work is being done here really to ensure that we have enhanced offering with respect to insurance. I would now like to call upon my colleague Sibongiseni Ngunze to come and give us his views about performance in the first half of the year within the personal and banking space.
Thank you, KGB. What I'm about to share with you is the progress that we've made in personal banking through the lens of our key strategic focus areas and the milestones that we have achieved. The first area of what we call winning is around accelerating and growing our active customer base. We've made significant progress on that front. We've grown our base by 500,000 new customers joining the bank. We've improved the product suite to over 2.4 million customers that are now using African Bank as their service provider or provider of financial services. Looking ahead, we have developed new propositions that look to serve and include new markets that have not been serviced up until now, and we'll cover some of those progress later. On the digital transformation front, we have made significant progress in delivering solutions for our customers that allow customers to do business with us frictionlessly and digitally. The first asset that we have deployed is in the form of our chatbot called Karabo. We've also enhanced security for our customers by deploying our identification and verification tools in the form of biometric. Finally, we have also won an award for our ability to create frictionless capabilities for our customers to onboard and join the bank. We are pleased that we were appointed by SASSA as one of the participating banks for the distribution of the social relief grant that SASSA are distributing to distressed communities and beneficiaries. As you will see over the next couple of slides, we've made great progress in diversifying our balance sheet in terms of asset growth. We have slowed down our unsecured lending. We have really dialed up our purpose lending, and we've introduced secured lending assets and/or solutions for our customers. In addition to that, we are starting to see a change in mix of channels that customers are doing or using to do business with us. And we have moved down the prevalence of branch usage more towards digital and direct, which is our telephony offering. On the product development front, I'm pleased that we have recently rolled out 2 groundbreaking propositions. One designed to solve for career starters in South Africa who uniquely always face the challenges of where to stay, how to commute, and getting a partner that backs you as you start your career. We have also launched a groundbreaking Isigo proposition that harnesses the power of what African Bank understands, has designed as products, and backs the culture within our communities, whatever culture you are looking to deliver or execute. We do not define it, but we enable you to plan, source and access our products, and ultimately do what matters in your life. All of these advances have helped us to get international recognition on 2 fronts. Our loyalty and rewards program was recently awarded an international award for the best loyalty program. We recently also received an award from the Digital Banker for the best digital customer experience for onboarding of our customers. And these, for us, are testimony to the work that we have been doing in building our digital solutions, enhancing our customer experience, and making it easy for customers to join and use African Bank. Turning to our unsecured lending business, we reported at the last results that we were pivoting our lending on unsecured in favor of more secured, introducing new lending lines. The impact on that is that we have seen new disbursements of personal loans reduce on the comparable reporting periods by 4%. However, we are pleased that in the same period under review, we've increased our purpose lending and have also started to introduce home loans. As you will see when we talk about our financials later, we now have a new line of secured lending in the form of home loans. In terms of channel mix, we are deploying our entire capability of hybrid distribution system, which is branch, telephony, and digital. And we're seeing a change in mix. And we've now moved customers that are using branches down to about 67%. And we're starting to see an increase of customers who do end-to-end fulfillment with us using digital and telephony channels. We are pleased with this progress, and it signals our commitment to do business with customers wherever they at without prescribing what channel they need to use. We have made great progress in offering relevant financial and banking solutions to our customers. As at the date of reporting, we have 6.1 million customers on the African Bank platform. 2.4 million of those use African Bank as their main bank. That is a 36% growth in customers that are transacting on our My World platform. We've also improved the funding levels, which is customers that have funded their account continue to use it at least once in a month. As part of improving our relevance of our proposition to our customers, we have seen 1.4 million customers take up our loyalty and reward program. And that's led to an increase in value disbursed to those customers to 100 million rand over the accounting period. We are pleased that these are partnerships that are mutually reinforcing and allow us to contribute to the financial wellness of our customers, enabled, of course, by partnerships and retailers that are part of our loyalty and reward program. This level of funding and activity has seen an increase of about 13% of customer-initiated transactions, growing from 49 billion to to about 52 billion. And this is really testimony to an improving strength of our retail and transactional franchise. Finally, we indicated that we had taken a series of actions to address the risk emergence that showed up during financial year 2023. We are pleased to report that across all of our matrix, the risk emergence period has now dropped to within the acceptable levels that are in line with our risk appetite. And that's measured across customers who are at 3 months, customers who are at 6 months, and customers who are at 9 months that have taken an unsecured and/or lending product with us. This then gives us confidence that we are now entering the phase where we can continue to release our risk appetite and back our customers over the next phase. At this juncture, I'd like to invite Zweli Manyati to come and talk to business and commercial.
It's a pleasure for me to come and spend time with you just to give you an update on how far we've gone in building this fully fledged, middle of the pyramid business and commercial that is digital at its core and offers beyond banking services. I will share with you some of the focus areas that we've been working on in this reporting period. We continue to make progress around customer co-creation of solutions. Transactional banking, I'll talk to you about the exciting stuff that we've got now in the market from a transactional banking perspective. We will also talk about the work that is being done to make sure that we automate our credit processes so that there is efficiency as well as benefits for customers. I'm very excited to talk about our digital lending business, as well as the integration of the businesses that we acquired, and lastly, just the success that we've had in driving growth insofar as our balance sheet is concerned. If I just focus on the progress in co-creating solutions, we had said that in the trader sector, we're going to be working with aggregators to make sure that we create solutions working with the trader themselves that resonate and addresses their pain points. I'm glad to say that our working capital solution has been deployed and we already have in the township economies. If I talk about Soweto and I talk about Vosloorus and in the East Rand, I'm very happy that we have begun to fund some of the traders. Of course, we'll continue to work with them and make sure that we address their transactional requirements as well, which is going to be underpinned by transactional banking that I'm going to be talking about now. I also said that we are building a transactional banking solution set that is meant to address the transactional requirement, payments and collections by our customers. I'm glad to say that we now have got a transactional account, we have got internet banking, we've got a mobile app. All of these were launched in April. We are already onboarding lots of our customers who already bank with us on the lending side, but we're also getting demand that's coming from the market even before we officially go on a public launch. I'm glad to say that this solution is going to not only make business and commercial contribute towards the transactional business of this an NIR, but it's also going to be driving the gathering of deposits, which will reduce the costs of funding for the bank. The work to automate our credit processes is progressing very well. Phase 1 of that has been launched to our front line. This is meant to automate and use workflow so that there is no need for us to be on a manual system. It is also going to benefit customers in the sense that at any stage, a customer will eventually be able, all by themselves, track the progress that is being made in the application processing. I'm also glad to say that this digital lending business that we've been talking about, that is going to be assisting us to deploy working capital in this SME space, minimum of 20,000 up to 5 million, we are in production. I'm glad to say that in our digital banking that we've been talking about, we've met all the regulatory requirements. We are already in production, and in this third quarter, which is the quarter we're in, we are going to be going to the market and begin to get our customers to really traverse the journey of getting this working capital solution in a manner that is going to be very fast, 24 hours, and there will be no paper that they will require to complete. Insofar as the integration of the businesses that we acquired, you'll recall we acquired Grindrod Bank, we acquired 2 businesses from Susfin, Capital Equipment Finance, as well as Commercial Property Finance, which has got a residential development component with it. All of these are being integrated into one African Bank Business and Commercial division, and we almost are getting to a point where it is becoming business as usual. The last piece I want to talk about is the real good growth that we have seen in the first half in our balance sheet growth, which KGB spoke about. We have seen substantial growth driven by organic as well as inorganic growth, the 2 acquisitions I was talking about, which is Susfin, Capital Equipment Finance, as well as the Commercial Property Finance. What is also pleasing is, yes, we're growing faster on the asset side. What is pleasing is that we do have very solid growth on our deposits as well. The last piece that I want to talk about is our Capital Equipment Finance gaining traction. We can see month on month that business is really beginning to cook. And we are very glad that this integration is behind us and we can now really focus on serving our customers. With those words, I would like to thank you and hand over to Anban.
Thank you, Butsweli, for that insightful views on business and commercial. It gives me great privilege to be presenting the interim financial results for African Bank during our Jubilee year as we celebrate 50 years of audacity. And as we move on, it's encouraging to know that our diversification strategy is starting to show green shoots. Firstly, our net profit after tax is up 15%. And if we just move on to the diversification of our balance sheet, 20% increase in our net advances, coming through from just under 50% from business and commercial, and a very muted growth of 3% from personal banking. That results in an advances coverage ratio of 21%, which has come down year on year. From our customer and wholesale funding, pleasingly, we're up 8%, and from our capital adequacy ratio, 28%. If we have to move on to our financial performance, non-interest revenue increased 30%, combined with our net interest income down 3%, and comes through in our net interest margin, also down 9.6% as well. That comes together with our total net revenue increase at 5%. Very pleasing is our credit impairment charge has reduced by 10%, and that comes through in our credit loss ratio being 5.3%. Operating expenses has increased by 16%, and we invested to build a fully-fledged bank, and our cost to income is up at 62%. ROE, once again, slightly elevated year on year at 3.2%. Once again, pulling all that together, our net profit after tax is at 15%. If we have to look at our income statement, I'll really unpack that in much more detail in the next coming slides, but the key takeout is to look at our total net revenue after impairments, improving by 14%. If we have to look at our active customers on our platform, really exciting that we have over 6 million customers on our platform. Even more remarkable is the 28% growth in personal banking. If you put that into customer numbers, that's over 500,000. Business and commercial, very pleasing customer growth at 9%. And as Butsweli mentioned, lots more products and innovation coming through that will accelerate the customer growth in coming reporting periods as well. I'm now going to spend some time really unpacking the income statement and the key movements from a year-on-year perspective. Firstly, if we have to look at the net interest income, deliberately it's down as we've now grown in business and commercial that delivers a lower net interest margin. Within personal banking, we've also moved in from different product mixes that yield lower interest income as well. If we have to move on to non-interest revenue, that is significantly up as well, coming through from our transactional growth as more customers transact and make African Bank their partner of choice for their financial services. We've also seen growth in our non-transactional revenue coming through from fair value gains as well as coming through from our fees and commission increase as well. Looking at insurance, we've seen an improvement come through from lower claims as well as better claims management that's seen us increase our insurance income. Then if we move on to our credit impairment charges, that has come down year on year as personal banking has spent a lot of time in terms of improving the credit risk management, and we've seen that benefit come through, as well as we grow in business and commercial, which is mainly secured products, that attracts a lower ECL charge as well. Lastly, if we have to look at our operating expenses, that has grown year on year, but we are building a fully-fledged bank and we're investing in our people and in our systems as well. If we have to just pause and focus a bit more on our balance sheet, we look at our net advances, that's grown 20%. But what has been really remarkable has been the 49% growth in business and commercial year on year. As we mentioned, personal banking has had a muted growth at 3%, but what has been really good for the bank is that we're diversifying our net advances with business and commercial now contributing 46% of our balance sheet on net advances, compared to a few years ago being under 10%. So we really spend time diversifying and ensuring that we achieve our Excelerate strategy objectives as well. If we move on to the asset mix, once again you can see that the net interest margin has declined year on year. That's quite deliberate as we've invested and grown our business and commercial assets which attract a lower net interest margin. However, if we have to look into the future, we certainly want to expand our personal banking, and we expect our net interest margin to be closer in the double digits in coming reporting periods. If we have to look at the non-interest revenue, it's up 38%. And where we've benefited is our transactional income has grown as more customers have come onto our platform and used our transactions and made African Bank their financial partner in their daily lives. Other non-transactional income has also increased due to fair value adjustments in our portfolio, as well as an increase in fees and commissions. Lastly, we always speak about our diversification of revenue, and you can see that decline in our dependency of the RDS collection, and that speaks to, once again, our diversification of our revenue as well. Then if we move on to insurance, what's been pleasing is the 8% growth coming through. We've seen a slight decline in our insurance premiums, and that's linked to the lower growth in personal banking. However, we've seen an improvement in our claims, as well as we've been really successful in selling much more insurance policies in our branch networks as well. If we have to reflect on the credit loss ratio, big improvement year on year. As we can see, the group is down to 5.3%, coming off from a year ago at 6.6. What's been even more positive is personal banking is at 7.8, coming down from 8.2 a year ago, as well as business and commercial at 40 basis points, coming down from a year ago at 1.7. Looking at our coverage ratios, it's been really pleasing that as a group, we're now at 21.4% compared to a year ago at just under 25%. That speaks to our selective origination as well as our diversification into business and commercial, which is mainly secured products, and all the enhancements and improvements we have done in our credit risk management. Moving on to the non-performing loans, year on year, as a group, we have reduced to 29.6% and last year being at 34.2%. In personal banking, we're now at 36.9% and a year ago at 38.6%. And lastly, at business and commercial, we've now also reduced to 15.7%, coming off a year ago at 21.2%. What this speaks to is our improvements in our credit risk management as we align to our industry practice, as well as our focus on rehabilitating distressed customers by providing them with treatments. As we move off our credit analysis, we move into our investment that we've been making to build a fully-fledged bank. Operating expenses are up 16% year on year, but we're strengthening and building our capabilities in business and commercial as we build our business and transactional capabilities as well as digital lending. In personal banking, we're focusing on purpose and secured lending, as well as ensuring across the organization we're building digital transformation in everything that we do. As we become a fully fledged bank, we're also investing in our risk and compliance functions and capability. We are really confident that although we're investing in people and systems, the necessary income growth will come to ensure that our negative jaws will turn into positive in future reporting periods. And now, as we move on to the balance sheet, we focus in terms of how we've grown over the last number of years in building a diversified balance sheet that will be scalable and sustainable, which is linked to our Excelerate strategy. We have grown from a few years ago from a balance sheet being under 30 billion to a balance sheet now being over 50 billion. We have done that by diversifying and growing in business and commercial. A few years back, our balance sheet was almost 100% in unsecured lending. If we look at a balance sheet today, we have net advances in business and commercial of 46% and personal banking being at 54%. Also, our deposits have more than doubled from 18 billion to 38 billion through the cycle. Moving into our funding liabilities, we are well diversified, with 91% of our deposits coming from our customers. We only have 9% of our deposits in wholesale funding. However, our Excelerate strategy is to have our wholesale funding at 20%. So we've got significant room and capability to grow in this important market. And as we look at our wholesale funding, we've been really successful. As we can see, the spreads for our wholesale bond reduce through the cycle. Just reflecting back, our 3-year bonds were at just under 260 basis points. It's now under 210 basis points. Our 5-year spreads were at 380 basis points, and our latest issue was at 261 basis points. Our Tier 2 was at 450 and also reduced to 445, which is really pleasing and encouraging of how the investor market has come into our bond issuance, and we've been oversubscribed over the last 2 bond issuances as well. As we reflect on our capital adequacy, we have adequate capital at 28%, coming down from a year ago at 32.5%, but that speaks to our surplus capital being deployed into our business. And as KGB mentioned earlier, we could have our capital adequacy ratio as high as 29.6%, and we are in discussion with the Prudential Authority on a capitalization transaction currently. In conclusion, if I have to reflect on the financial position, our key takeouts are definitely being our strong customer base at over 6 million on our platform, solid advances of over 20%, mainly coming from business and commercial as we diversify our balance sheet. Capital market confidence has really been positive as we've entered the wholesale market and been oversubscribed, as well as reducing our spreads. Adequate capital to ensure we are set for growth in the future. And if I have to move on to financial performance, net interest margins declined very deliberately as we move into business and commercial that does yield lower yields, as well as the product mix within personal banking as well. If we have to look at the solid transactional and non-transactional services, that's driving our non-interest revenue. And once again, lower credit loss ratios continues as we diversify our balance sheet, as we spend more time improving our credit risk management. Operating costs increase as we invest in people and systems. That results in a net profit after tax of 15% year on year. Thank you so much. And I'd like to hand over to KGB, who will continue with the conclusion.
Thank you, Anban, for that comprehensive financial analysis. Hopefully, we've been able to position this morning the work that is being done to continue to build a data and digitally enabled business that is diversified, has got a de-risked balance sheet, is sustainable at the core, and continues to build that compelling proposition for investors going forward. It is work that is being done, as well as reported in Business and Commercial, to launch in April this year what has been beyond transactional capability for customers, enabling us to not just bank customers through our balance sheet, but also walk their financial transactions journeys with them. Improving banking services for SMEs continue to be a key cog of our banking of the middle and bottom of the pyramid, and the launch of our digital lending platform is at the heart of this. My colleague Sbongiseni spoke earlier about the work that we are doing to continue to enhance the lives of our personal banking customers, now over 6.1 active customers in our platform. The work that we're doing in personal banking is also about advancing people's lives through enhancing the secured lending platform, but also reinforcing that core of the business that we've been known about in retail unsecured lending for customers and for entrepreneurs. Expanding our innovative solutions includes the career starters, banking by the millions, and the newly launched Isigo platform, which speaks to the cultural life stages of our people. We wouldn't be a credible bank for the people, by the people, if we do not understand these life stages and if we do not have offerings that support our people in this regard. Alliance banking and insurance continue to be emergent new areas of revenue generation for the bank, diversifying our capability through working with partners in telecoms, partners in fintech and VAS service providers, ensuring that the convergence of technology and financial services really enables us to offer better services to more and more customers out there. Our partnership with ShopRite, with Lesaka and MTN Mobile Money in this regard has really been empowering. Our newly enhanced insurance offering continues to enhance what we offer both business, commercial, and personal clients by leveraging digital channels and developing non-life risk products and expanded funeral cover with improved distribution for customer experience. All of this make for what is the remainder of the year that continues to be exciting for colleagues at African Bank and for our customers as well. I do want to just conclude now by saying that the work with respect to the pre-IPO continues, and it ensures that whilst we've registered the key milestone for Ikamva Lethu, bringing staff into alignment with shareholder interests, we are working hard to ensure that we bring management as well into that space, and we'll be talking at the end of the year with a little bit more detail with respect to the management scheme. All of this work is to prepare us to list African Bank post-2027 with a de-risked proposition, with an empowered proposition, and with a proposition that is aligned with staff management for new shareholders coming on board. I'm excited by the fact that work is already advanced to ensure that we can launch a BE retail scheme for entrepreneurs and communities later this year. And we will say a little bit more about this aspects of our pre-IPO work, which will ensure that this indeed is the bank by the people, for the people, serving the people. But as we reflect on 5 decades of African Bank resilience, we look forward with optimism grounded in our African identity and unified purpose. We remain proudly a bank that seeks to enhance lives, a bank founded by, founded for, and founded to serve the people. In conclusion, I'm now going to call colleagues to come assist with taking questions and address whatever is top of your mind. Thank you.
"50 years ago, during the height of adversity, the very first African bank opened its doors. The bank for the people, by the people, serving the people, was the audacious vision of banking pioneers who dared to dream of a financial institution that would serve the underserved. It is a dream that has not only endured, but flourished.
This new bank would do more to change the social structure in South Africa than any previous enterprise.
In a challenging economic environment, we have dedicated ourselves to supporting our customers with cost-effective financial solutions that provide value and convenience and reflect their reality. We remain well on course to achieving our mission of building a customer-centric, data and digitally enabled, diversified business that is scalable and sustainable with a compelling listing proposition. We celebrate the audacious spirit in all our South Africans. We will continue to walk alongside them on the path to prosperity. An audacity to believe is the beating heart of our African Bank story, and we have the audacity to believe in our people. For this is more than just a bank. This is a movement. African Bank is a beacon of audacity, a symbol of empowerment, innovation, and inclusive growth. Here are the highlights of our financial performance for the 2025 half year. Our net profit after tax net advances. African Bank's non-interest revenue. Total funding. African Bank's cash reserves. Our total capital adequacy ratio. African Bank's active customers. Insurance revenue. Our growth in funded My World accounts. Growth in transactional volumes. Growth in transactional value. As the African Bank Holdings Group, we are humbled by the responsibility of building upon the legacy of our founders. The baton those pioneers have passed on to us has inspired a strategy that has empowered and continued growth and diversification of African Bank. We remain focused on enabling the growth of businesses, particularly those still relegated to the sidelines of mainstream economic activity, while enabling a level of financial inclusion that will allow people the opportunities and support to pursue their aspirations regardless of their social standing. We thank our customers and our stakeholders for the trust they have placed in us. African Bank, audacity to believe.
Welcome back, Zweli and Anban, to assist me with questions. The first question is actually directed to me. The question is, the results show good balance sheet growth. What does this mean in the broader context of the bank's journey and IPO process? Well, as we indicated, the 20% growth in balance sheet does get us to more than doubling the size of the balance sheet since the start of the Excelerate strategy. This is good. A bigger balance sheet allows us to do more for our customers as a fully fledged personal, business and commercial bank. But what's much more intriguing for me is this 49% growth contribution coming from business and commercial, and I'm keen for Zweli to expand on what that does, where that comes from, and how we got there, and what's happening going forward. However, I do just want to say that this speaks to how diverse this balance sheet has become in terms of the shape of the balance sheet, with a 3% benign growth in unsecured lending. We can do better there, but it does indicate this seismic shift in what is now almost a balanced secured and unsecured lending book, de-risking the business, diversifying our revenue streams, clearly assisting us in building a compelling listing proposition for this bank going forward, as we present a bank that can box with more than one revenue stream, a bank that is a lot more de-risked. You'll see the reduction in our credit loss ratio and expected and our coverage ratio as a result of the much less riskier growth in our secured business all along. This is good news for a company that is on a journey to attract investors, that wants to see an investment that looks like a normal bank investment and not just a high risk, high return, monoline, unsecured retail asset, which we've been for almost 3 years. So this 20% overall growth in our balance sheet is coming from on-strategy stuff that enables us to move with confidence towards listing post-2027, market conditions allowing. The next question is directed to you, Zweli. And it is about the business and commercial growth of 49% in advances. What's driving the surge?
Thank you very much. So this is a combination of the acquisitions that we did, as well as the momentum that the frontline team has gotten into really growing this business. You'll recall that we acquired business from Sasfin, capital equipment finance, that was about 2.3 billion. The balance came from the good work of the frontline team, and it's right across all products. Thank you very much.
Thanks, Willie. The next question. It's great to see traction made with home loan staff offering. What's the status of rolling out of the vehicle asset finance offering to us remaining competitive with employee value proposition and customer value proposition? Anban, do you want to treat this question?
Thank you, KGB. Definitely. I think we've really seen pleasing results from, firstly, our staff as we've rolled out our home loan proposition. I think as we build out to become a fully-fledged bank, and as you've mentioned, KGB, moving out of just being a monoline, our staff is really excited that as staff members, they can enjoy the benefits of working for African Bank. And one is getting a home loan, which is key to our staff members as well. Certainly, as we've learning on our home loan product, our next product, as we expand, we'll look to vehicle and asset finance. And certainly at our next reporting periods, Sibongiseni and the team will certainly give further timelines on how we roll out our vehicle and asset finance proposition to our staff and external market as well.
Thanks, Anban. We've got two questions from Charles Russell, SBG Securities. The first one, can you elaborate on the journey to profitability and activating Alliance Banking customers? And second question, can you briefly explain the rationale for insurance restatements? Anban, you'll help us with the second question.
Perfect.
I'll deal with the first one. And again, thanks, Charles, for these insightful questions. We're delighted to report these half-year numbers with another significant increase in African Bank active customers on our platform, moving to over 6.1 million. A significant part of this 6.1 million customers increase comes from our alliance partners, particularly what we do with MTN Mobile Money, what we do with ShopRite, and of course, what we do with Lesaka on the social grants payment front. We are expanding our alliance banking partners as we indicated in our presentation. But for your question, Charles, you will have seen the amount of cross-selling that is taking place between us and MTN Momo, ShopRite Checkers, and Lesaka. We're doing better in embedding customers' financial services and banking products into those customers. And that is why this alliance banking strategy has more than broke even now. It's starting to be profitable, with the lead in terms of net profitability coming firstly from ShopRite Checkers partnership and then Lesaka. We believe that with more products and VARs that we are planning to launch with MTN Momo, that will also come through over time. But really an important part of Excelerate strategy, this idea that we grow with partners that are in the fintech, telecoms, and value-added services.
Thank you, KGB. Just answering, Charles, on your second question regarding the IFRS 17 restatement half year, and I'll try not to be too technical. IFRS 17, which we've implemented during our FY24 financial year, has two methodologies, a PAA method as well as a GMM method. During the H1 last year, we implemented the premium allocation method, which was the PAA. And during the second half of the year, in consultation with our auditors and our product suite, it was decided that the GMM is more appropriate. So therefore, to have a consistency of earnings comparison, we've now shown the H1 2025 to be comparative to the H1 2024, and both being on a GMM method, and therefore that resulted in the restatement of FY25 half-year results.
Thanks, Anban. The next question comes from Maria Msimango, and it reads, is the Teba partnership profitable to the bank? If yes, is it in both SA and out of SA? Maria, as you will correctly recall, the Teba partnership came with the Ubank transaction a few years ago. The addition of Ubank customers, Ubank colleagues, systems and capabilities has meant a significant uplift in our personal banking offering and performance over the years. Successful, smooth integration that has enabled us grow the acquisition muscle, enabling us to do what has now been done with Grindrod Bank, Sesfin, big businesses of Sesfin Bank, and et cetera, et cetera. The Teba partnership there has really been value-adding for us, and it continues to assist us in reaching to customers in the mining villages, mining communities, within far-flung areas of South Africa, and also in the neighboring countries where some of these customers are at. We are bolstering our capability to serve them with developments around what we can do with transmission payments, with foreign exchange, with time, to serve these customers much better. It has been a very positive and value-adding relationship that we can to continue on. The next question is directed to Anban, and it reads, please elaborate on the drivers of group's improvement in credit impairments and credit loss ratio.
Thank you, KGB. And I think what's really important is, as a group, we have two divisions, firstly being business and commercial and personal banking. As we mentioned earlier, in business and commercial, we've experienced a 49% growth year on year in our net advances. The products in business and commercial are mainly secured products, and therefore they assist us carrying a lower ECL charge on them, which benefits our diversification strategy. And within personal banking, we've really spent a lot of time over the last few years improving our credit risk management and our processes, and aligning ourselves with industry practices as we aim to do selective lending, as we improve our treatments that we allow to our clients that are under distress, as well as ensuring we engage in competitive efficiencies in our call centers, as well as align with our industry practices as we look to do book sales, as we manage our portfolio as well. Thanks.
Thanks, Anban. The following question comes from James Stark, and it reads, congratulations on the good progress. Thank you, James. What level of ROE do you see as achievable over the medium term as you land the various strategic initiatives? James, this is an important question. We all know that ROE is the most trusted financial ratio used by investors to assess a performance of banks in particular and financial services companies in general. We've come pre-Excelerate strategy from what was a negative ROE to now a modest mid-single digits ROE. We believe that with continued diversification of our earnings, stability of our earnings, given the diverse revenue engines that we've now started, the lower risk we are taking in terms of the businesses we run, both in NIR and NII, all of that combined with a much more efficient management of our capital. We are in constant engagements with the board, with the regulators, around much more better recognition of the economic and regulatory capital deployed, so that we improve both the numerator and denominator of our ROEs. We believe that an ROE that will be attractive to investors when we go listing should be in the mid-teens. And that is what, in our view, good looks like. And we think we should be able to achieve that prior the listing of African Bank. At least that's our ambition and our target. The next question How has the bank repositioned itself for relevance in a fast-changing financial landscape? I think this is a really beautiful question, and I will cut it into two. Firstly, with what we are doing in digital lending, digital transformation in business and commercial, and also what we're doing to ensure that we are at the cutting edge of the key drivers of this fast-changing operating environment in financial services. And my view is that whilst there's quite a few of them, the most potent are, one, regulatory changes, two, the convergence of big data, big tech, machine learning, AI, with financial services. And so in terms of regulations, we've seen changes in terms of the payments regulations in this country. We think there'll be more. What we are doing in alliance banking with telcos, with fintechs, with VERS, enables us to use the new capabilities that regulators are now allowing in digital and innovative payment space for us to play in there. And that is partly why this alliance banking strategy is important for us. It is definitely for profitability. It is definitely to grow customer access points and grow customer acquisitions. But it is also fundamentally about us remaining at the cutting edge of what these new players in financial services are doing and remain close to them. This is how you keep up to the fast pace and change led by regulatory changes, amongst other things. On the convergence of technology and financial services, you'll have seen us launch in the personal banking space a lot of fascinating things in our bank app that allow us through machine learning and AI powered offering to really walk the journey with our customers and ensure that when they transact with us, when they interact with us, we do so in a data and digitally enabled fashion. This has really revolutionized our personal banking offering, particularly on the digital front. But Zweli, you've been doing a lot on the BNC as well in terms of digital.
Yeah, we've got mainly two things that perhaps are worth mentioning. The first one is, of course, transactional banking. We now have got a transactional account that has got an app as well as internet banking. That's the first one. The second piece is just around the end-to-end credit processing. We're busy digitizing that in order to make sure that it's easier for our customers and it delivers value, and let our guys in teams focus on advisory work as opposed to the manual paperwork that they've been working with. Last one, of course, is the digital lending business that is coming.
Thank you, Zweli. Exciting stuff indeed. The next question is, as we celebrate our Jubilee year, what do you think your founders would say about the progress made so far? Geez, I didn't expect that question. We really, maybe I should start off by saying we really are honored to be this generation of African bank leaders, to have the baton at this seminal point, the 50-year celebration since the opening of that first Ga-Rankuwa branch in 1975. This is a bank of purpose, a bank of necessity, a bank that obsesses with serving the underserved and the underserviced. And so the fact that we've made it thus far speaks to why it resonates so much with our customers. Customers that have stood beside this bank through its highs and through its unfortunate lows, particularly the two curatorships over the last 50 years. We pay tribute to African Bank customers who have grown from a strong 1.1 million when we started this Excelerate journey in 2021 to now a solid 6.1 million, and many of them taking more and more new products, new services from the bank. This Jubilee is about your commitment to what this bank stands for in this market. And I think our founders would first and foremost pay tribute to you, our 6.1 million customers of African Bank. We're delighted that alongside Zweli, Anban, and the board and many group executives here, we also lead passionate bunch of 4,500 African bankers who every day come into work, show up with their A game because they believe so much in the mission and the purpose of this bank and what it's meant to offer our customers. So we really are delighted, and I think and I hope that Ntate Maponya, Ntate Mtswenyane, Mambeki, all of them, as they look beyond, they see pride in what we're building together here. The next question comes from Jabulani Simon. Geez, that was a difficult question. Quite emotional as well. So just to compose ourselves and go back to the next question from Jabulani. How soon will African Bank be listed as one of the top rated in the JSE? Anban?
Thanks, KGB. Yeah, Jabulani, I think that's definitely a very exciting and interesting question. I think as we've mentioned in our results and even in prior reporting periods, our Excelerate strategy is our guiding North Star to our listing. That's our journey. Our plan is to be there towards the end of FY27, and our intention is to list during the calendar year of 2028. In terms of becoming a compelling listing proposition, that's always the intention. So we certainly, during the 2028 year, would certainly want to be, when we list, to be a compelling listing stock that the market is certainly interested in, and we have achieved our targets in terms of our Excelerate strategy. And as we all know, going into the next few years, that's our North Star, and certainly there will be market things that will work positively and negatively, but we're certainly keeping our eyes towards the end of the FY 2027 financial year of achieving our listing proposition and listing during the 2028 calendar year.
Thank you, Anban. We have no further questions. I want to take this moment to thank you for making time this morning to hear our half-year interim results. Thank you for interacting with us in this Q&A. Please feel free to continue to be in touch via our website and our customer emails as we journey to the rest of this exciting financial year 2025. It is a Jubilee year. It is a year of celebrating the milestone that is 50 years of African banking, and we are truly grateful for your continued patronage. Thank you.